Hi everyone, welcome to another edition of Market Talk. 2 weeks have passed. Uh, Interesting 2 weeks. Finally, for quite some time we have increased volatility in these markets. Average true ranges are up. We see moves up and down. Uh, Today, Raphael and I we will discuss about our views in the markets and what we expect for the month of December and till the end of the year. Before we start, I want to remind everyone that myfractalrange.com is a risk management platform. If you have not tried our products, we have a trial for €1 where you can test it risk-free. Also, we have Black Friday deals happening right now, so I encourage you to check them out. Uh, yeah, so the topic uh, for today's show is it over or are we back? So this is my question to you, Rafael. Are you bullish or you think that more troubles are ahead? So what are your views on the market?
Yeah, tough question to answer. I mean, we've been very cautious for some time now, and again, it was I think a good idea to be, especially considering what we just saw happening these past 2 weeks. There's there are different signals actually showing currently on the charts I'm going to show, especially considering the current volatility setup in indexes, but also in single names. But at the same time, some pivots are being reclaimed for the past 2 days, especially, making it difficult not to take attempts to be long some specific assets. So I'm going to go through everything. I'm currently long ES, I'm currently long gold, and I'm currently long Bitcoin. So I'm going to go over everything, but also I'm going to go over my positions. Okay, so let's share. Okay, give me a sec to organize. Okay, should be good. Okay, so first of all, I want to go through the volatility aspect of everything. So if you monitored my volatility script, the situation that happened was pretty obvious. The volatility was rising, trade of volatility was rising. This is yes, but the same picture happened on NQ, same picture happened on DAX, CAC, Nikkei, but also on single name stock such as NVIDIA, Tesla, Palantir, Amazon, and you name it. So if you saw that, you knew that volatility was definitely in the book. And usually when you get volatility, what you get is a sell-off. The idea I had for VIX when we did the last show, I think it was almost 3 weeks ago, was we had two paths. One was VIX down, another one was VIX up. So basically, we got the confirmation. The confirmation was happened actually when volatility of VIX actually started to go down. So what you had was a spike in vol. I'm going to go back to VIX later on. But yeah, if you saw that, you knew that definitely something was brewing. Now, we are talking about today. So the past few days, what we saw after we reached some particular levels here was ES was able to reclaim its macro pivot at 6658. So you know this pivot based on the trading plan provided by Vi. It's on page 4 of your trading plan. And today actually reclaimed its sorry, it's a quarterly pivot. I'm trying to activate, but you can see the value is here. Sorry. So this is definitely technically it's quite bullish. An asset that is reclaiming its macro pivot, reclaiming its quarterly pivot, and also showing cap. I'm going to switch here in white. You can see better. So you have a cap on the downside, meaning that the long-term low of the range and the normal low of the range, they are equal. It's actually also materializing in NQ. Sorry, it's loading. Okay, here cap, but you have the same also in the DAX. You have a cap to the downside. So it's taking time. But anyway, and in CAC as well, you have a cap. So if you were in the mood to attempt to fade this sell-off and actually to use the tool provided by MFR to get back in, this was definitely the place. So I'm taking the shot and I'm gonna see. The stop is at the macro pivot, and I'm waiting to see what's gonna happen with volatility. For sure, it's not very comfortable to see that when you see this kind of volatility, but it can change pretty fast. So the idea would be to see the blue here, that's the volatility of ES. You can use SPY, you can use SPX, doesn't matter, the picture is the same. I want to see the volatility get back down. I want to see it get below trade of volatility. I want to see volatility started to confirm the fact that it's making lower highs and lower lows. And then I will feel even more confident and start to get more aggressive. For now, it's a technical play. I think Vi is going to go through the pivots, but yeah, you had a chance these past 2 days to enter. I hope you took it, and now we just wait and see. Now for DXY, so we've been in a bullish setup for some time now, and you remember when we mentioned that was in that was in September, that the cross of trade and trend of volatilities was happening, and that DXY was transitioning to a bullish formation, and that's what happened. For now, based on what I see for the volatility, DXY still has room. Trade of volatility still has not reached its minimum trade daily target that I have for a potential pause, or at least a longer term pause, or even a top. So in my opinion, we still have some room for DXY to continue. So if you're long UUP, if you're short your USD, sure, you need to act at levels, pivots, etc. But based on the vol, the structure remains the same. The dollar is bullish. For now, it's having difficulties at the yearly target here. So that's another one provided by our script. Anytime it has attempted to use it as a resistance, it has failed so far. Sorry, as support, it has failed so far, and it has maintained its status as resistance. So until you see this level being broken, being used as support, the next leg up, or the next continuation for DXY is not happening. Basically, what you need to see is you need this level to be used as support. So yeah, still bullish, but I want to see this one break to confirm the next leg up on DXY. Now VIX. So another confirmation actually that you got that was on Friday, And that was actually funny to see some macro people actually turning at that particular point. Another thing that you saw was the fact that my matrix indicator, so not to confuse with the matrix from Vi, I'm sorry, we are using the same name for two different stuff, actually reached the place that I mark for looking for dips in equities. So that's in the the value, if you want to mark it, 142. So you can mark it here on the matrix. Basically, when the momentum reaches this value, and you need to have other triggers as well, but that's when you start to look for dips. So another confirmation was this. So if you are trying to risk some capital, you had another confirmation. Now, regarding the volatility of VIX, it's starting to make higher highs and higher lows. But I mean, one concern I have is usually when you have some volatility period, trade of volatility will reach some mean daily trade target that I set up. So again, I look in the past, I see where the trade of volatility of a particular asset will go before I see a real significant top for this asset. And the first mean daily target for the trade of volatility of VIX still has not been reached. So we are seeing some good stuff. Matrix here reached the level where I would look for dip. Volatility of VIX is starting to make higher lows, higher highs, which is good, indicating a potential transition of VIX to bearish trend. It's back below MFR trend, but VIX is a mean reverting asset. So that's normal to expect. So what I would like to see here for volatility is I want to see the volatility of VIX actually start to use trade of volatility as support. When I start to see that and I start to see volatility actually starting to rise in this manner, then okay, I will be convinced that we are out of the woods. So again, one of my concerns is the fact that trade has not reached its first mean target, meaning maybe we get this kind of setup that we've experienced since the beginning of October. So VIX goes down, VIX goes up, VIX goes down, VIX goes up. So until we see a clear continuation of volatility of VIX above its trade of volatility, it's possible that we get some this kind of price action. So it doesn't mean we don't do all-time highs in ES. Just means that expect some chop until volatility of VIX clearly is pointing up. So another one that cannot get its ass off the floor is oil. So I traded this one here and got out of trend, and I mean this one is doing the same thing all over again. It's just going to trend anytime you try to buy this kind of retest of the low of the range or any levels that you may find of interest. It's just unable to break trend. So if you're bear, that's good. I mean, you've made definitely you've made money on every attempt to reclaim our proprietary trend. But if you're a bull, I mean, it's avoid this avoid oil. There may be a time next year to long oil, but so far, and it's just not one asset that you want to buy. Now let's go to gold. And actually gold gave us an add opportunity that was on the 18th of November. So I mentioned in the previous show that I was buying gold anytime it was in this area. And we had another opportunity to add to the position here on the retest of the monthly pivot. So I hope again that you acted. That was a nice one. And contrary, for example, to an asset like Bitcoin, I'm going to talk about this later, but the slope of the range is quite good. I mean, you could see here first of all, the upside downside ratios. So how much capital you were risking versus how much you could make has been great for the past what 10 days, let's say, and the slope is quite good, just pointing up, pointing up. I mean, my expectation remains the same. I think gold is gonna start another leg higher. I'd like to see volatility also. Let me switch to white. I'd like to see volatility actually start to point back down, trade of volatility start to point back down. When I start to see this, I'm going to add again. So monitor this one. I mean, it's played quite nicely in the past, in the past month. So I hope you acted, and especially I hope you added when you saw the retest of the monthly pivot. That was an easy one. And actually, silver did the same. I'm going to use cash, but silver did the same. It was 2 days ago. So on Friday, you had a retest of the pivot. So you had an opportunity to add here. I think it's a quarterly pivot. So here you could have added, and here you could have added. So if you prefer to play the long silver instead of the long gold, or even if you are playing both, you again add another adding opportunity here. So I mean, can you imagine this trade, for example, if you took it at the quarterly pivot, all you got was a move to the target in a span of what, 2 weeks. Beautiful move for your portfolio. Now let's go to the last asset I bought. So Bitcoin. So unfortunately, this one was quite difficult. So I made a mistake and broke some rules trying to buy it. I tried to buy on the first trigger of my buy and sell script, and that was a mistake, especially considering I was waiting for the buy the dip script to trigger, the one in red. As this one, I've filtered it to the max. It will only trigger when conditions are very extreme, making it more, let's say, you feel more confident when you are actually buying using this one. So I got stopped several times, so 3 times in total on the attempts I did. Ultimately, managed to get a very good average in the 20s and the 83,000 area, and let's go there. And yeah, I took some off at the retest of the monthly target. I want to see this one hold and see how far I can go. I'm looking to unload a big chunk on the retest of the yearly pivot. But yeah, stop is at even. One thing I don't like so far, and that's the opposite of gold, is the slope of the range. The slope is absolutely terrible. You can see it's pointing down, long-term range pointing down, low of the range, low of the long-term range pointing down. I expected this slope to change and get back to the upside with the triggering of the buy the dip script, but it's not. So I'm on the lookout. I really want to see this thing actually move back up. Anyway, this script, buy the dip one, you have access as an elite subscriber, and you can backtest it because it's available. You can see it as far as Bitcoin has been active, and it has a very high batting average. I think it's the word. So it works pretty nicely. That's why I felt confident to buy. And the fact that I had the macro level provided by Vi from the latest video we did for elite subscriber made it quite convincing for me that okay, that was the place I had to look for. So yeah. Another thing that happened on the weekend, was it Friday? Yeah, Friday, and then continued on the weekend was the fact that Ethereum was also triggering a buy. So, but the slope same, pointing down. So I want to see this thing move. I want to see this thing move up. Actually, Ethereum is using its monthly. No, that's quarterly. This one, yeah, quarterly target as support, which is good. That's a good thing. But I like to see the slope of the range move up. So yeah, attempting to buy the dip is quite difficult. I made a few mistakes. Took some notes. Okay, next time be more careful. Wait for maybe for more confirmation. Wait for bigger levels, and especially wait for macro levels to print. But yeah, I'm in this one, and let's see how far I can go. Now let's go to yields. So in the last show, I was thinking that maybe yields were about to transition. What made me say that? So if you look at the 2-year, 10-year, and 30-year yields volatility, I will show you now. Volatility was pointing down. Volatility was pointing down. Trade of volatility was pointing down. When you see that, usually there's a trend shift about to happen. And what you would expect when when the trend shift happen is the asset to actually start to rise. And strangely enough, it didn't happen. So yields just went to trend, sorry, didn't move, despite the fact that volatility was going down, and just decided to reject trend. So I remember Vi was very bullish bonds, and seems like he was on the winning side. I was wrong. I was expecting, because of the volatility, to see actually yields start to go back up and bonds to have some trouble. And you can see the same picture actually in most of the bonds. So volatility is rising, right? Here, I will show you all of them, but they all look the same. Volatility was rising, nothing happened. Actually, what you got was a quite nice opportunity to deep buy bonds. So I hope you followed Vi on this one and you didn't follow me. But yeah, kudos to the ones who acted. Maybe Vi, you can talk about bonds at some point in your part. So yeah, that's pretty much it. Today we actually had an opportunity on one of the darling stock, PLTR. I got a buy signal and actually it retested its quarterly target, and you have a cap. So I don't know if some of you were watching, but that's what you call a trifecta. So that's a cheap trade, like Vi calls it. You have a buy trigger, you have a significant target. Quarterly is one of the most important ones, and you have a cap. So if you bought here, I think it's a good entry. Another one Vi mentioned during the latest show for elite subscriber was Meta. Meta went with the yearly pivot, held it. That was a nice place to actually accumulate. You had also a cap to the downside happening. I don't remember if I had the buy. I think, yeah, it was, yeah, okay. It was printing buys. That was another one. This is the kind of setup actually you want to look for. And this is when you can take cheap trades. So basically, you take a shot. You have a pretty defined risk. You're not risking much, but if this thing start to climb back up, you are quickly in profit and in a very good position. So yeah, I just wanted to point these two because the setup happened recently, and that's a way to use the tool. I mean, that's cheap trades to take with high reward, low risk. Okay, that's it, guys.
Uh, Yeah. Thanks, Raph. Yeah, when it comes to individual names, yearly open, especially in the second part of the year, a yearly open is make it or break it moment because a lot of capital flows would change if these things break. There is a question, and before I add to it, there is a question on YouTube chat. You are always talking about 84,000 level on Bitcoin. Can you, without going into depth, can you explain where you got it and what it is?
Yeah, I got it from Vi.
Yeah, but
You okay? I can explain. Okay, so in the page 4 of your lead plan, Vi made a video and is doing it after expiration of futures contract. In this video, he mentioned the way those macro levels are defined. Macro levels are expiration prices. So in that case, you correct me if I say something wrong, but in that case, that was a Bitcoin futures uh, contract that was used, and 84,000 was one of the expiration price for at least the price at the expiration for Bitcoin futures. So I use this price as the pivot for my entry for Bitcoin. Yeah, that's basically it. I mean, if you want to add something, right?
yeah, I will. I will show at least two more numbers that match with that 84 using different methods and why it made this level even more significant.
Yeah,
But
sorry, I forgot to add something. And one point that you raised, and actually this thing you need to print in your mind, I guess, it's Vi said in the latest show, macro points is also called flatten zone.
yes,
So that's where the if you have, for example, people who are short, institutions who are short, and the an asset is actually falling, and it gets to one of those macro level, they will flatten their position.
yeah.
So if you are looking to buy a dip and you've got tons of triggers saying buy the dip, buy the dip, buy the dip, and you arrive at that point, your mind must be thinking, okay, the guys who are short, the big guys, they are flattening here. So what's gonna happen when they flatten? This thing is gonna have some short covering, or at least the other side will not be that big. So if I want to take a long, that's the place I'm gonna act. So sorry.
Yeah, good explanation. And also, 86,000 area has plenty of targets. I will show them. That's why it made the zone even more significant. Before I start, I want to ask everyone if you find these videos useful, uh, press a like button, subscribe to our channel if you haven't, but your likes will help us a lot for the YouTube algorithm and to reach more people. So if you find these videos helpful, press a like button, it will matter a lot. Okay, so now I will share my screen. And yeah, in the beginning of the month, when the new trading plan video will be released, I will provide an Excel spreadsheet with these macro zones and flattened zones, because even though these levels rarely, well, they never change, only new ones are being added. But even though I talk about them on every video, we receive questions where people can get those levels, can where people can check those levels and so on. So uh, in the next trading plan post, you will find not only a spreadsheet with targets, but also I will create this macro zone and flattened zone sheet. And in the next trading plan video, I will explain to you what each column means and so on. So you will always have a resource where you can simply open a spreadsheet and check those check those levels for most important futures contract. Okay, before we dig deep into assets, actually let's start with the usual stuff. And actually, there are a lot of interesting things to talk about outside of individual names. We will first start with correlation, of course, so real-time correlation. In this case, it is 10 days. And I want you to look at the TLT correlations to equities. So SPY, of course, and QQQ, and we have these correlations in zero 0.4, even 0.5 area when it comes to DIA. Also, gold is positively correlated to bonds. And as I said 2 weeks ago, actually, the hidden bull market is now in bonds. I remain very bullish. Bonds stayed, both ZN and ZB are strongly above their macro zones. For ZB, it's 116 and 25 30 seconds, and for ZN, it's 112 and 24 30 seconds. And ZB and ZN spent a lot of time flirting with those levels, so churning them up and down. But finally, we have another breakout, and I'm sure that we will get another move up in bonds. Just a question of time whether we get it in this exploration cycle or we will get it next year or maybe both. But I still expect strong up move. Basically, my expectations are either flat price action in the short term and bull run in next year, or a bull run both in December and part of next year as well. So when we are looking at these correlations, and also when we are taking into consideration that indices reclaimed their pivots and today reclaimed their quarterly opening prices as well. Gold today spent some time above 41, 46 level, which is a major macro zone. This also adds some conviction that the Santa rally that I was expecting can actually happen not only in the second part of December, but maybe we will get a run even earlier. So this week and next week, we will see, of course, how it goes. I still expect equities to have a rally at least in the second part of December. And of course, in the second part of December, we will have new numbers and a new plan for where this market will go in the next cycle. But for now, this is so when we are looking at these correlations, and if I change a period, so another period that I really like to look at, you will see that even on 21 days, we don't see significant negative correlations at all. You will either see that bonds are either have no correlation to major indices, slightly positive, slightly negative, but this area is basically there's no correlation. Or if you are looking at individual sectors, you will actually see that still bonds have quite a strong correlation to most of the sectors. XLP as an example, REITs and so on. So you can see those on the screen. Where we see a negative correlation with bonds is, of course, the dollar, which is a normal thing to expect, and energy sector. Uh, Again, yields and the overall commodity cycle matters a lot for both of these sectors and some other sectors as well. I will touch on oil because I'm looking to buy oil if we reach couple of significant levels, and we are approaching these levels. But of course, I will talk about individual assets and asset classes a bit later. Now I want to talk about the correlation and keep this in mind that this change in correlation can take equities up together with the bonds. Of course, if bonds continue to rally, which I think they will. So, yeah. Now, average correlation to S&P 500. So, how the situation uh, is evolving, what is happening. So on a 10-day basis, we have 0.61, nothing too crazy. Correlation went up, but uh, nothing too extreme. I want to remind you that in October we had way higher correlation just before the topping of the market. So market needed some correction. Market needed to shake things up a little. So now the only question is, will we remain above the pivot after this shakeout and will go to new all-time highs, or will this shakeout continue for quite a while, and maybe then we will get some push in a second part of December. But for now, we are just following the plan. Of course, market reclaimed pivots, and that's what we need to care about. So now if we go to assets, I will start with Bitcoin today because it's really interesting, and of course we had a couple of questions. So now if we look at the targets for Bitcoin, what you will see is that second target for the month was 86,700, depending on your data feed. When it an exchange, when it comes to Bitcoin, I will just round things up because numbers will differ slightly based on which exchange you are looking at. But yeah, let's say 86,000. Then we had a major macro zone at 84,000. When I talk a lot about equal measure, equidistant swings, if we have a recent most significant upswing where the Bitcoin made all-time highs at 126,000. If we take a this last impulse, it went from 108 to 126,000, which is 18,000. Again, we will round things up. If you subtract 18,000 from 108, you get 86. You get another matchup. So market is, and there are other ways, and also if we take a look at the MFR ranges for those days when these moves happened, what they were signaling. Again, I'm always talking about matchups. You need to look because markets are not random, markets are fractal. You need to see which numbers are matching in many places, and then you will know where the market is going. So when we got this bottom, when this range was broken, we also had a for the at least couple of days there was this matchup which just said that, hey, in about this area uh, we are at a very important level. It's a very strong signal to watch. And of course, the breakouts, not bounces. We are not buying falling knives. So Raphael mentioned that, and it's a great job that, of course, you want to, especially when on that day when the Bitcoin went all over to below this 84,000 level, and actually even basically 80,000 level. You don't buy it until it is not reclaiming that 84 or 86 area back from the below. So it needs to come back above this level. And of course, at least for now, it did. I also bought, but it's a small buy zone for me for now, just for a couple of reasons. To the upside, the reason is that we are below yearly pivot. That's why I'm not going all in. But this is not the main reason. Another reason is if Bitcoin continues a move down, my all in, or let's call it buy big zone, is closer to 72,000. Again, all these numbers are matching with a lot of ladders that we are providing in our videos, and again, this is also a reason why I will create a spreadsheet for trading plan with most important numbers. But in one of the videos, and I think it's the last time I will repeat it publicly on Market Talk, and we'll continue to talk about those things on Trading Plan. But in one of Trading Plan videos, I showed you guys how to get a third ladder if market reaches, let's say, quarterly target, first and second, how to come up with a third one. So I'm sure you know that. So now, if on the top left of my screen you are looking at the quarterly targets, and if you would calculate the third downside target, which especially with numbers like that is obvious, you will also arrive at that same number I was talking about, and I showed you many ways how you can arrive it. So yeah, this zone is significant. If move down continues, I will not touch it until we reach maybe 72,000-ish area, but yeah, this is a relatively cheap trade, and very good entry. So I also bought a small position. Yeah, but hopefully it answers at least partially about that 84,000 level and where we got that. So now I will go to yes. So with yes, it's Raphael said most of the important things already. I agree with basically everything that he said. Sorry, I want just to show you what I mentioned in the beginning of the show, that in the short term, average ranges and volatility is slightly up. Of course, nothing compared to April and some other periods, but still looks like ATR is breaking. So we will see where it will go if we get um, more volatility to both sides, or if market calms down. But for now, the plan is very clear. For now, the plan is very clear. We are back above. First of all, we are back above annual targets, which was a tough one to crack. If we zoom out a little and see the price action of this year, so of course, when market reached it, it spent a lot of time churning around the target. Then we went higher and extended the range almost, but we have not reached quarterly target, at least for now. And at the same time, we have not reached the macro zone of 69.83 also. But market is above this yearly level. Market is, of course, above 66.58, which is the level we are talking for the last couple of months. Today it closed above 67.25, which is a quarterly open. So yes, it's back to being positive for this quarter. Next stop would be 68.78, but if we break that one, then we'll see new all-time highs and with a final target for the cycle of 69.83. Sorry, if we see a couple of closes above 69.83, I mentioned it a couple of times, it's not that I'm calling for this to happen, but the second target for that cycle would be 7,300. But of course, for us to reach that target, we would need a crazy Santa rally. Now, to the downside. In a trading plan video, I will prepare you, I will give you all the ladders to the downside, but basically for now the plan is this: if market comes back and goes below 66.58, I would not risk my hard-earned money, and I would not be holding any SPY or equities in general. So if market stays above 66.58 when it reclaimed, all good. We can play for we can prepare for the next move. If not, then we will have zones to execute. But I can immediately tell you that these zones will be way lower and way lower. So don't buy falling knives if we get these falling knives. But for now, everything looks good. One day at a time, one level at a time, but for now, everything looks quite good. So, NQ 24,568 is the most important number for this quarter. We are above that. Quarterly open is 24,843. We are above that. Same story based on annual targets. NQ is even stronger than ES, even though it may not look like it. But basically, this annual target acted as quite a strong support for that. And of course, we are above. We are finally back from our downside targets for the month. So because you see that NQ basically reached its second monthly target. Now we are back in the neutral zone. Let's call it neutral zone. So in between first downside target and the open. But yeah, next step is 26 handle. And if we close above, our final target for the cycle will be in the 27 handle. So these are the news. This is the plan. And same story. 24,568 is the level you need to watch. Yeah. Gold. This is the asset I want to talk. I want to talk about gold, and I want to talk about oil, because oil, I'm actually watching it quite closely. Yeah, so gold respects all the algos and all the our zones and targets very well for now. So as Raphael mentioned, this level of monthly open was a spot, and also we have a lot of numbers. Again, I will turn everything into spreadsheet because we are listening to you guys, and we received multiple questions about how to get them. So, but when it comes, and yeah, if we come back to Bitcoin, this is the level Raf talked about, and we have a cluster of important targets in this area. Again, everything will be in the spreadsheet sooner or later. I will prepare everything. But yeah, if we are going to gold, we have previous macro zones at 39.60 and the current flattened zone and the quarterly pivot at 39.83. So if we go above 41.92, we will go to the new all-time high. And if we close above 44,000, I will provide new levels that we will go. But basically, the picture for gold, and I was talking about that for a long time. Most likely in every show, market talk show for the last, I don't know, multiple shows that I'm bullish gold and silver, and yeah, so looks like 3980 to 3960 zone was the spot to buy some. We are above monthlies. We are approaching our first quarterly target again, which of course we broke last month. But basically, if we go above 41.92, we will go to the new all-time high. And actually, that's what I expect. And remember when I was talking about gold and bonds correlation, it also matches with my view regarding bonds. And when it comes to bonds, targets for ZB, I can quickly tell you, pivot is 116, 25, 30 seconds. But yeah, my first goal where I would be interested to sell some longer term duration. Don't get me wrong, don't not to short longer term duration, but to reduce some long positions in duration would be ZB at 119. Now we are at 118. But yeah, basically bonds look strong, and final targets for the cycle are way higher. Now, what I'm looking at in oil and why I want to talk about it. 53 to $55 area is where I will be watching this market even more closely for reversals and for potential buy opportunities. Because I think that for now, even though we have this downward move and short-term indecision in oil, what it wants to do, this market doesn't want to go below $50. If we go below $50, it will be very big. There will be very big acceleration in selling even further. But for now, I don't expect that. But we have a quarterly target at 53. We have a monthly target at 54, and very important macro zone at 55 and same 53 area. So I will just quickly show you this on dark ones that we have very important zones at 55 and $53. And this is another matchup, but it's not the only one. As always, I want to say that it's not the only one, because at 52 and then I believe at sorry, this is not the one. Yeah, at the same 55 handle and 52 and a half handle, we have, of course, projected downside from the ranges perspective. Yeah, so for now, I'm not long, I'm not short. I have no position in oil or any of these proxies. But actually, I started looking at it, and we have new pivot for CL. I will tell that pivot in the trading plan video. Trading plan video will come on the first, will be available on the first trading day of December. So yeah, and we are below that level. So for now we are going to, we are in the downward momentum, but we are approaching areas where I will be interested, and I will have some alerts set up for sure. So that's it for me. From me, actually, one minor difference from, in my view, from previous shows and my thinking is that now I'm even more cautious. Yes, I remain bullish, or I'm back to being bullish. And yes, I expect Santa rally, and we have very clear and defined targets for that. But based on this volatility and wiggles in the market, of course, I want to stress even more the importance of not holding positions if market reverses and managing your risks. Yeah, so I see there is one question
Yes.
in a YouTube chat. If you have any additional questions, feel free to ask them. I'm stopping my screen share for now, and this is what I wanted to show you.
Thank you, Vai. Can't wait for the trading plan for December. Yeah, regarding your question for the buys that disappear. So there are two scenarios when a buy can disappear. So one of them is intraday. So basically, you have a huge sell-off. All the conditions are met intraday for the buy to trigger, and actually the price action reverse. That's the point of the buy, right? And one of the conditions is not met anymore, and the buy will disappear. The same thing can happen. For example, you have a trigger, and the next day it's not there, meaning that one of the data point actually that was making this script uh, act changed. This usually, in my opinion, I think it's coming from the data provider, because I have found no reason for the buy to be there literally at let's say so in my time, so right before midnight, and the midnight 0.01 it's not there. So my opinion is one of the data point changed. So the way these scripts, the buy and sell and the fucking deep script are structure is the following. The buy and sell, they have, if I remember correctly, they have four conditions. One is values in volatility. Another one is oversold, overbought. Another one is value from matrix, and another one is something you don't have access to. For the buy the fucking deep script, those ones they have additional conditions. Those conditions are manually input by myself, meaning I went in the past, I looked at, okay, this happened for example, volatility, trade-off volatility, specific value for matrix or something like that, and I just hard-coded those values by hand to tell the script buy and sell, buy and sell, only trigger the buy when you have these additional values. So yeah, so a quick sum up. So intraday, because the price bounced and one of the data point change. If it disappears the next day, from what I've seen, because I've seen it happen, it's because one of the data point valued changed. So, and in my opinion, it's coming from TradingView. And third, I explained how those scripts were buy and sell by the scripts were coded. Again, it's an additional tool. Okay, it's not like, okay, wow, I see the buy, I'm just buying. I made that mistake unfortunately on Bitcoin for the buy and sell, but you need other data points. All the scripts, they are there to increase your confidence when you are actually taking action. So yeah, that's the answer. If you have a follow-up one, please do.
Yeah, thanks, Raph, for explaining.
And yeah, Ted will be back at the beginning of December. He's traveling with family. I think he told me he's gonna be back on the 7th. But yeah.
Yeah,
Okay.
so
No
I don't know, unless someone else has any questions, I think our views are clear. One thing I wanted to talk about, and I really hope my message was clear, that the only change is that now you need to watch your back even more closely, and not only because of this volatility, but because we almost reached
Break.
that macro zone. of 69.80. Yeah, we topped at 69.50, but basically market almost reached its goal. Now volatility it has increased end of the year, and yeah, expectations are for rally, but just because of this period and because market already had nice runs, just it's even more important to watch your back now. But also follow the signal. And for now, signal says that even though vol is increasing, market is not in the collapse mode yet. So yeah. So thanks everyone. Thanks Raphael. Hopefully see you all in 2 weeks. Happy Thanksgiving for everyone who celebrate, and yeah, manage your risk, and see you all. Bye.
You, bye bye.